For years, people have argued whether Bitcoin is digital gold, but heading into 2026, this debate stops being theoretical and starts becoming measurable. Let's start with Bitcoin. After peaking in late 2025 near all-time highs, Bitcoin entered 2026 with a sharp correction. From peak to trough, Bitcoin has experienced drawdowns of roughly 45–50%, something that isn't unusual historically. In fact, Bitcoin has gone through multiple cycles where it lost 50–80% of its value before recovering in later years. Volatility remains extreme. Annualized volatility for Bitcoin often ranges between 50% and 80%, depending on market conditions. Gold tells a very different story. Over the past year, gold has delivered returns in the range of 50–65%, one of its strongest modern performances. Its volatility, by comparison, typically sits closer to 10–15%, making it dramatically more stable. Historically, gold drawdowns are far shallower, often in the 10–20% range during major corrections. Market size also matters. Gold's total market value is estimated at over $13 trillion, supported by central banks, sovereign reserves, and long-term institutional holders. Bitcoin's market capitalization, while enormous by digital standards, fluctuates in the low trillions, meaning it is far more sensitive to capital inflows and outflows. A few large buyers or sellers can move Bitcoin in ways that would barely register in the gold market. Then, there's adoption. Central banks continue to be net buyers of gold, adding hundreds of tons per year to reserves. Bitcoin, on the other hand, is still primarily driven by private investors, funds, and retail participants. That difference shows up clearly during periods of stress. Gold tends to rise when fear increases, while Bitcoin often sells off alongside other risk assets. So, what does this mean for 2026? Gold is winning on stability, capital preservation, and institutional trust. It doesn't need exponential gains to be successful. A steady single-digit to low double-digit annual return fulfills its role perfectly. Bitcoin is winning on asymmetry. Despite its drawdowns, Bitcoin has still outperformed gold dramatically over longer time horizons. Over the past decade, Bitcoin's cumulative gains remain multiple times higher than gold's, but only for investors who can tolerate deep corrections and long periods of uncertainty. This is why asking who wins misses the deeper point. Gold is optimized for a world that feels fragile. Bitcoin is optimized for a world that is transforming. In 2026, gold likely continues to shine during moments of geopolitical stress, monetary uncertainty, and institutional caution. Bitcoin likely performs best during liquidity expansion, technological optimism, and renewed confidence in risk. So the real question isn't gold versus Bitcoin. It's how much volatility you're willing to endure, and what kind of future you believe we're heading toward. Because gold protects what you already have, and Bitcoin bets on what the world might become.